Welcome to Kenyan Market Daily podcast. Today, we're really diving into the latest market reports, breaking down the key movements on the Nairobi Stock Exchange and, shining a spotlight on some of Kenya's most influential companies.
That's right.
You've sent us some incredibly detailed sources, things like AIB, AXYS Africa Daily Whispers, and the AIB AXYS Daily Market Watch from June 19th, 2025, and also the Business Daily, Kenyan Financial and Market Highlights.
Yeah, good stuff there.
Our mission today is basically to sift through all this, pull out the really crucial bits, and figure out what it all means for the market, like right now. Think of it as your shortcut to being genuinely well-informed.
Exactly. We're cutting through the noise. These aren't just numbers. They're insights into, well, the pulse of Kenya's economy and specific company strategies. We want to show you how to read between the lines of these reports, really, to get some practical understanding.
Okay, let's get into it then. What's the overall feeling, the pulse of the Nairobi Stock Exchange today, according to these reports? What does that market snapshot look like?
Well, if we look at the AIB AXYS Daily Market Watch for June 19th, trading activity really picked up. Equity turnover.
That's the total value of shares traded, right?
Correct. It surged to over 600 million Kenyan shillings. KES 602.14 million, actually.
Yeah.
Yeah, to put that in perspective, that's more than doubled the trading volume from the previous session, so a significant burst of activity there.
That is a serious jump in trading. What about the overall market value, the market cap?
Interestingly, despite that huge leap in turnover, the market capitalization, that's the total value of all listed companies, it only saw a very slight uptick, barely 0.2%, settling just over KES 2.27 trillion. So it suggests more stability rather than, explosive growth in overall value.
Right.
Now, the Nairobi All-Share Index, the NSE, it closed with what they call bullish momentum, showed a 0.2% gain.
Right.
And that index gives you a broad view of the whole market, so that positive move is generally seen as encouraging.
So the broad picture seems, well, cautiously positive, but what about the other key indices, the ones tracking different bits of the market?
Yeah, it's a bit of a mixed bag there. While NSE, the broad measure, was bullish, the more specific indices tracking top companies actually saw slight declines.
Oh, okay.
Yeah, like the NSE 10, which follows the biggest, most liquid companies, that dipped by 0.3%. And the NSE 20 and NSE 25 also recorded marginal declines.
So a mixed bag.
Exactly. It often means that while the general feeling is positive, maybe some specific big stocks, the blue chips, might be facing some headwinds, even while overall trading volume is up.
And here's where it gets, well, really interesting for me. We've seen some pretty big swings recently, and the sources hint at outside factors. What's been driving some of these market movements, especially when you think about global events?
Yeah, this is where Business Daily gives us a really crucial piece of the puzzle. It explicitly says the NSE has been, quote, steadied after a rout from the Israel-Iran conflict.
Ah, okay, so they're directly linking it.
Directly. The market actually recovered nearly 20 billion shillings recently. It broke a 3-day losing streak that had apparently started because of that Middle East conflict.
So, geopolitical tensions, literally miles away, having a direct, measurable impact right here in Nairobi. That's quite a clear link. Does the report explain why, though, beyond just stating it happened?
Well, it connects into investor sentiment, fundamentally. Analysts are warning that if hopes for de-escalation, calming things down in the Middle East, if those hopes fade, it could keep weighing on shares globally.
Right.
And that ripple effect is felt even here. It just highlights how interconnected everything is now. No market is an island, and global anxieties can quickly turn into local jitters, affecting confidence and, crucially, where people put their money.
That's a powerful point. And for you, the listener, how do you see these kinds of external global events impacting local markets? Do you notice that ripple effect straight away, or does it feel like there's a lag, something to mull over as we look at this data? Okay, let's zoom in now. You specifically asked us to focus on some of the major players. Safaricom, the big banks like Equity, KCB, NCBA, Co-op, and also Kenyan. What are these documents telling us about where they stand right now, maybe their strategies?
Right, let's start with Safaricom Telecommunications PLI, a true titan in Kenya. According to the AIB AXYS Daily Market Watch, Safaricom was the most traded stock, or counter as they call it, on June 19th. Turnover was huge. KES 227.10 million.
Just on Safaricom?
Yeah, it's not just a big number. It really underlines its massive liquidity and how central it is to what happens day to day on the exchange.
So a massive amount of trading. How did the stock itself perform?
Well, its performance was actually key to that overall NSE bullish momentum we mentioned. Safaricom PLOT itself rose by 0.9%. And Business Daily adds that it gained KES 0.50, which stopped its three-day losing streak again, a streak linked to that Middle East conflict, just like the broader market.
Interesting.
And here's another layer. It was both a top foreigner buy, meaning lots of foreign money coming in, and a top foreigner sale.
Both. How does that work?
It suggests really active trading and repositioning by international investors, some buying in, perhaps seeing value, others selling, maybe taking profits, or reallocating. High volume both ways.
Okay, so lots of foreign investor action swirling around Safaricom. Now, I noticed the documents, they give us loads on its market activity, but they don't actually give a specific BUY, sell, or hold recommendation or an upside percentage for Safaricom in that Daily Whispers investment advice section.
That's right. No explicit recommendation listed there for Safaricom in this particular report.
But its significance, like you said, is just undeniable.
Undeniable. Okay, moving to the main banks. Let's start with Equity Group. Business Daily has a really fascinating detail here. Equities, land, and property collateral for its loans. It's crossed the Sh1 trillion mark for the first time.
1 trillion in property collateral.
Yeah. As of December, Sh1.15 trillion worth of title deeds held. That's up 80.2% from the year before, and it makes up, get this, 82% of its total collateral.
That's huge. What does that signify strategically?
Well, it signals a very foundational, perhaps solid approach. But you could also argue it's potentially less liquid compared to other forms of collateral. In a volatile market, you have to ask, does concentrating so heavily on land reduce risk, or maybe amplify it if you suddenly needed liquidity?
Yeah.
It really makes you think about Kenya's unique financial landscape, how tied banking is to property.
Definitely food for thought. Any other highlights for equity?
Yes, it was also noted as a top foreigner buy, so attracting foreign investment, and it contributed positively to the NSE gains. But again, like Safaricom, no specific buy, sell, hold in Daily Whispers.
Okay, got it. So an incredible amount of property backing their loans. What about KCB?
Right, KCB Group Yolisec. Here, Daily Whispers does give a clear recommendation, BUY, with a potential 20.1% upside.
Okay, and why the BUY?
The reasons look pretty solid. Increased net interest income, basically, making more profit from lending, helped by strong credit demand, and maybe surprisingly subdued interest rates. Also, its subsidiary expansion is really paying off, contributing over a third of net earnings already.
Right.
And strategically, selling off NBK lets KCB focus on what they see as high potential areas. So, lots of positive drivers identified.
But I sense a but.
Well, the Daily Market Watch tells us KCB was the second most traded stock that day. Huge volume again. But it actually dragged the market down slightly, declining by 1.4%.
Ah, so KCB is recommended as a BUY. Looks good on paper with that upside, but its actual trading recently saw a slight dip. That's a really crucial nuance, isn't it? Shows that even strong fundamentals can face short-term market pressures.
Absolutely, a perfect example of that disconnect sometimes. Okay, next up, NCBA Group PLOT. Daily Whispers recommends a hold for NCBA, but still with a decent potential upside of 16.2%.
Hold, but with upside. Why?
The reasoning includes the start of their NCBA insurance operations that's expected to help their main revenue streams. Plus, they anticipate a lower cost of funds because of declining interest rates, which should boost their overall profit margins.
And the property theme.
It continues. Business Daily notes NCBA Group has substantial property security to $334 billion, which is about 67% of its total security.
Another bank heavily reliant on property collateral. It really is a sector-wide thing.
It seems so. Then, Cooperative Bank of Kenya. The Daily Market Watch reports its turnover at about KES 44 million. It helped the NSE's bullish momentum, rising 0.9%.
Okay, positive movement.
Yes, but interestingly, it was also listed as a top foreigner sale, suggesting some foreign investors were moving out of that particular stock. And like Equity and Safaricom, Daily Whispers didn't give a specific BY sell hold for Co-op Bank in this report.
Okay, so looking at all these banks, Equity, KCB, NCBA, Co-op, what does it all mean for the banking sector's outlook more broadly? Because it sounds like, well, a very mixed picture of opportunities, strategies, and maybe some challenges.
It is, and Business Daily sheds some critical light here. It reports that banks expect weak demand for loans for June and July 2025.
Weak demand, even with lower interest rates and recovery talk.
Exactly. It seems counterintuitive, right? But the report suggests banks anticipate a slowdown in private sector borrowing. Why? elevated costs of doing business, low disposable incomes for consumers hitting their wallets, and ongoing worries about taxation.
Mm,
So even though some banks have strong collateral bases, like we discussed, or smart strategies like subsidiary growth or focusing on efficiency, this broader economic environment might make it challenging to actually grow their core business, which is lending money.
that's a really vital piece of context. Okay, now you mentioned KPLC earlier, but our sources actually zoom in on Kenyan Co., PLA, the big power generator. Let's dive into that.
Indeed. For Kenyan Cowpill, Daily Whispers gives a hold recommendation. But look at this, with a significant potential upside of 48.9%.
Wow, nearly 50% upside, but still a hold. Why the caution?
Well, the reasons highlight this tension. On the one hand, progress at the Olkarianet geothermal plant is set to add 63 megawatts. That's a big deal for increasing their capacity, especially with clean energy.
Right, that's positive.
And they're also working on cost optimization, improving their efficiency, their cost-to-revenue ratio. That's also good. However, and this seems to be the sticking point for the Holdy rating, their existing thermal power operations remain expensive.
Ah, the older tech.
Exactly. So Kenyan faces this critical challenge. How fast can they transition more towards cheaper, greener geothermal without these older, expensive thermal plants becoming a major drag on their overall profitability and efficiency? It's a balancing act.
Makes sense. Any trading highlights for Tenjin?
Yes, the Daily Market Watch also notes Kenyan Pils was a top foreigner sale. So similar to Co-op Bank, some foreign money moving out there.
Okay, so summing up this section, really varied performance and outlooks. Safaricom driving market activity, banks showing strength in collateral but maybe facing weaker loan demand ahead, and Kengen with huge green growth potential but wrestling with legacy costs. It's a truly dynamic picture. Let's zoom back out then. Look at the wider projections for the Nairobi Stock Exchange. What trends are the experts watching in the equity indices, especially thinking about investor confidence?
Okay, the equities highlights section in the AIB AXYS Daily Market Watch gives us that broader view. It repeats the point about the bullish momentum of NSE, driven by those big players like Safaricom and Cooperative Bank making gains.
Right.
But it also notes, as we discussed, that other counters, like ABSA Bank Kenya and KCB Group, actually weighed down performance with their losses that day. It reinforces that mixed picture.
But what about the foreign investors? You mentioned bits here and there, but what's the overall picture? That's often a key sign of confidence, isn't it?
Absolutely. And this is probably the most striking detail in this section. Foreign investor activity. Foreign investors remain net buyers. They recorded inflows money coming in totaling KES 53.03 million.
Okay, 53 million. How does that compare?
Get this. It's a massive increase, over 1,000% up from the previous session's net inflows, which were only about 4.8 million.
Wow. A tenfold increase in foreign capital coming in just in one day?
Exactly. It indicates really strong and growing foreign interest in the Kenyan market right now. And the equities indices trend chart described in the source, it visually backs this up, showing that general upward path for the NSE, even if the NSE 20 index has been, a bit more up and down.
So connecting this back to the bigger picture, what does that really strong foreign inflow plus the NSE's bullish run tell us about confidence, especially when you consider those underlying worries like the banks expecting weak loan demand? Does it suggest maybe a long-term optimism from abroad that outweighs some of the current domestic challenges?
It really raises an important question for you, the listener, doesn't it?
Mhm.
How do you read that? Do these big foreign inflows signal a kind of renewed global belief in Kenya's long-term potential?
Mm.
Maybe looking past the immediate bumps like inflation or business cost concerns.
Mm.
It encourages us to think critically about that interplay, local sentiment, specific company performance, and these big global forces. It's like a sudden rush of fresh water into a reservoir. It feels like a healthy sign. But you always have to ask, how long will the taps stay open? What could turn them off?
Right. Okay, before we wrap up our deep dive into the local market, the sources also give us a quick look at the global stage. What's the general mood out there in the major international markets?
Yeah, the AIB AXYS Daily Market Watch has a global market summary. And the picture there was pretty mixed overall, but with definitely bearish or negative feelings quite strong in the U.S. and European markets.
Okay, so negativity there. Any specifics?
Yeah, for instance, the S&P 500 and the Dow Jones saw slight falls. Over in Europe, the UK's FTSE 100, Germany's DAX, they also dipped. And the report links this broad decline largely to those global uncertainties we talked about, stemming from the escalating tensions in the Middle East.
Still that Middle East factor.
Yes, it explicitly mentions that leaders taking hardline positions are likely prolonging the conflict, and that creates this persistent drag on market sentiment globally. Asia was a bit more varied. Japan's Nikkei 225 was up slightly, but China's Shanghai Composite was down.
So global instability casting a shadow. Were there any specific global companies mentioned, maybe active stocks or recommendations?
Yes, briefly. The report mentioned some most active global stocks, like Nvidia and Tesla, both seeing declines that day. But more interestingly, Daily Whispers did provide some BY or hold recommendations for global names, seemingly bucking the trend.
Ooh, like who?
Well, for example, Alibaba Group Holding got a BUI with a pretty hefty 43.4% upside potential noted.
Wow, why the optimism for Alibaba?
The rationale pointed to its strong free cash flow, which supports share buybacks and dividends. Also, robust volume growth and increasing investment in AI to boost efficiency. So focusing on internal strengths.
Makes sense. Anyone else?
Amazon.com also got a BUI with a 12.8% upside, driven by strong growth in Amazon Web Services, AWS, success in digital stuff, and their fast-growing high-margin advertising business.
Okay.
And there were others mentioned too, like Lockheed Martin, BUY 12.0% upside, citing strong demand amid geopolitical tensions. Walmart, BUY 15.7% upside due to market share gains and e-commerce strength. And AMD, HLD 3.3% upside, balancing data center growth against PC market cyclicality.
Interesting to see those specific global recommendations, even amidst broader caution. Now, this brings up an important question. How much does this global instability, like those Middle East tensions that hit the NSE initially, how much does it really echo long-term in Nairobi? And what should our listeners be watching for to sort of track that connection?
It's like a constant dance, isn't it, between local strength and these global tremors. That immediate reaction we saw on the NSE after the Israel-Iran conflict, it really highlights how global events can directly spark local market moves, even if they prove temporary.
So what should we watch?
I think what you should watch for is the duration of these global tensions. Do they lead to sustained shifts in investor confidence or capital flows? If instability drags on, it could deter that foreign investment we saw spiking. It could affect export markets for Kenyan goods, maybe disrupt supply chains. Those effects would then ripple through to local companies. So pay attention to how companies with big international operations, or those relying heavily on global supply chains, how they react. They'll likely be the first to show the strain, or perhaps a resilience. So, okay, let's try and pull all this together. What have we really learned today? I think, firstly, the remarkable resilience of the Nairobi Stock Exchange, particularly the NSE, bouncing back despite those external shocks like geopolitical conflict.
Yeah, that stood out.
And we've gone beyond just the headlines, right? We've dived into the pretty varied performance and the strategic moves of key Kenyan companies. You've got Safaricom dominating trading, the banks with these huge property collateral strategies, but maybe facing weaker loan demand, Kenyan making that pivotal shift to geothermal.
But still dealing with legacy costs.
Exactly. And crucially, we saw that significant and actually growing foreign interest in the market, shown by that massive jump in net foreign inflows. Knowing these kinds of details gives you a much deeper, more actionable understanding than just reading the surface news.
Exactly. So what does this all mean for you, the listener? Whether you're learning, investing, or just, curious, this kind of detailed look shows us that understanding the why behind the numbers is key. Things like the bank's collateral strategies, or the real impact of a new power plant coming online, or even how those geopolitical tremors half a world away can actually be felt here. That's what's crucial for being truly well-informed in today's market.
Couldn't agree more.
What's truly fascinating here, I think, is that continuous interplay. Global events, specific company strategy, local market dynamics, they're all interconnected. So keep asking yourself, how might today's foreign investor confidence shape tomorrow's market trends in Kenya? And maybe what could derail that confidence or what could accelerate it?
Good questions to ponder.
That brings us to the end of another detailed look into the heart of the market. We really hope this has given you a powerful shortcut to being well-informed. If you found the session valuable, we'd really appreciate it if you subscribe to the Kenyan Market Daily podcast, wherever you get your audio.
Please do.
And make sure to follow our channel on all the socials. You'll find all the links right there in the podcast description. Your support genuinely helps us keep bringing you these kinds of in-depth analyses. Until next time, keep digging for knowledge.